Hello traders, the title of this video is Trading Systems Masterclass Part 3. If you have not watched Part 1 and Part 2, you may do so before watching Trading System Masterclass Part 3. Let's get started. In the first part of the video that we have recorded, Part 1, we were talking about the importance of the market. It is essential for swing traders and day traders to check, to analyze the markets. The market is the S&P 500, including other major indices. All right. The next thing that we have discussed in the second part of this series of video, we were talking about the market leaders. The market leaders can change the dynamics of the market itself. If we have 3 or 4 market leaders bearish, they are likely to drag, the market down, all right? On the other hand, if you have 3 or 4 major market leaders bullish, they are likely to drag the market up. Economy news that affect market leaders will affect the market in general, all right? So you want to know, all right, the weighting, of each market leaders, very important, all right? So in this video, we will discuss, the individual financial instrument. So you want to trade a stock, or you want to trade a currency, you want to trade a commodity, you have checked the market, you have checked the market leaders. Now you want to check, the financial instrument that you are about to trade. I want to say something very important to traders. The old way of trading, all right, in the past, when traders look for double top, double bottom, and place a trade, and everything worked fine, the old days of trading, where traders do not do a lot of work, are gone. Why? Because the dominant market participant, the hedge fund, are actively, paying attention to the economy news. Decisions are made according to, the macroeconomic condition, the financial environment, the market environment itself, the market cycle. These are smart market players. This is what I like to call the big elephant. As the big elephants are making their decision using, the macroeconomic data, ordinary traders are forced, to reorganize their trading strategy in order to profit, from this messy market. In this part of this video, we will talk about the financial instrument. How do we analyze the financial instrument? So you want to trade, for instance, Hewlett-Packard, which is listed on the Dow Trading. So you want to trade Hewlett-Packard. So here we are. Look at it. It's a double bottom. Yes or no? So he went up and then pulled back like this. Now he's sitting here like this. All right. But before I continue with this chart pattern, I want to tell you a story that's happened last year. In this, you see this candle here? This is a 2012 candle. In 2012, there's something was happening with this Hewlett-Packard. We can see that Hewlett-Packard was bullish for some time. You can see that on the weekly chart. You can see here, there is a key level here. You can see that. In fact, it went below it. It tried to go. There is another support here. Hewlett-Packard, a lot of traders get into trouble here because there was some pattern, especially on the daily chart, that looks very, very bullish, at the key level. But Hewlett-Packard was going down. Why it was going down during this session here? You can see that professionals, were selling it big time. We're selling it. They were just selling it. Why? Because there was some news relating to Hewlett-Packard that were bearish. But if you are an ordinary trader, you are just doing your own thing with your chart pattern, you will be in a big mess, all right? But if you are a bit curious, after the technical analysis, you go to Google Finance, you go to Yahoo Finance, you check the Forex Factory, you pay attention to a bit to Bloomberg, all right? You want to know what is happening. You check the balance sheet. You check the cash flow. You compare the short-term debt to the short-term liability. You check, the return on capital. You check the earning yield. You do your homework, and you notice that now there is one important news that is very, very bearish. Until that is resolved, the smart money will continue to sell. If you see a bullish signal, you will not take it. Not because the signal is not valid, but you know that the sentiment is bearish. A lot of swing traders, all right, or option traders, a lot of ordinary traders will go and place a trade. Especially some traders use also area wave pattern. So you see area wave pattern, you say this is it, this is the end of the cycle, we must buy. End of the cycle, we must sell. It's not a bad decision, but the next step is to do your digging, so to speak. Go to Google Finance, all right? Just try to familiarize yourself with Google Finance. Put in the name, all right? Put in the EPIC, HPQ. You will see the news. You will see, okay, the balance sheet. You will see the cash flow. You can just be a bit curious. One of the things that is messing up day traders and swing traders is the economy news. So you want to trade stock, okay, especially traders that trade one financial instrument. So you are trading the same thing every day you are trading it, every day you are trading it. You want to trade it, that's what you like to trade, okay, that's fine. But be a bit curious, check the economy news, because if you do not check the economy news, if you do not check the fundamental, if you are using the technical alone, what did I say? You will be going round, 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 round. It's not because you cannot trade, it's just because you don't want to move one step ahead. You want to be a child, okay, all your trading life, or you want to be, okay, a teenager all your child life. You want to move one step ahead. I'll tell you, over the year, I was trading Forex before, and I don't go to Forex factory. Until, okay, the music has changed, I have decided to pay attention to the Forex factory. You want to know when the news are due. You want to know the high impact news. You want to know the low impact news. You want to know what time of the day is suitable for trading. You want to avoid volatility where the news can move the price ups and down anyhow. You want to know. If you know, then you can design a better strategy. Sometimes traders will do their homework. So they spend a lot of time. They check the daily chart, they check the yearly chart, they see the key level, they know the strategy that they want to apply, but they just don't want to move it a bit further to check the economy news. Like here, when Hewlett Packard was going down, all right, a lot of day traders, swing traders, get into trouble. Okay, I was trading Hewlett Packard at that time, but then suddenly the price started changing. There was one day when the price dropped big time. In fact, they took me out that day. Are we on a daily chart? There was one particular day last year, 2012, and there was one particular day here, and the price dropped big time. All right, must be somewhere 2000. So must be October. No, it wasn't October. October was on holiday. So somewhere last year, the price must be this session here. All right, price gap down big time. All right, gap down big time. All right. So these are the things that usually happen. The price will gap down or will gap up because some economy news are influencing the market. And sometimes you will see it. Sometimes traders will change their trading system. So they are using one trading system, and then suddenly, within a month, they start losing big time because they miss a very important point. So what I want traders to remember in this video is that we cannot, in this day and age, afford to use technical analysis alone. We must go to Google Finance, we must go to Yahoo Finance, we must combine, okay, the technical with the fundamental. So after the market, after the leaders, one must now check the financial instrument, check the balance sheet, check the cash flow, check the economy news before you start placing a trade. If you do not want to do it, all right, know that, okay, the economy news can instantly change the dynamics of any financial instrument. I hope you have enjoyed this video about trading system masterclass part 3, and we'll put it into use, okay, to make excellent decisions. Before I close this video, I would like to stress one important point to new traders. When I was a new trader, this is one of the points that I was very, very reluctant, okay, to adhere to. The reason is that whenever traders are talking about check the risk-reward ratio, check the economy news, I just close my ears. I don't want to know. I do not recommend trade to new traders. I do not recommend to anybody to adopt that silly trading attitude like myself, but to start adopting the mindset of the hedge fund and the professional traders. Thank you for watching, and we will speak to you very soon. We are the TSTW 24 traders. Speak to you soon.